Next up here, we have Quim Abril for Team USA, one of the investors I handpicked for our team here. So I've known Quim for a little bit of time, for maybe 3 or 4 years, and I'm real excited to have him here to pitch his stock on our behalf. So Quim, take it away. Let's hear your pitch, and then we'll do your thing, and then we'll have some questions at the end.
Okay, thank you, Maj. Thank you, Robert, for these invitations. For today, I have a short thesis small thesis in Paysign. Market cap today it's 155 million. Current price is just below $3 per share. So let's see. Well, here's the disclaimer. Just all of this is for educational. Right now, I'm not a shareholder of this position. Okay, go with the main idea. So Paysign is a prepaid card company that they play in the plasma niche business. Right now, maybe at the end of this 2022, Paysign is going to have 462 plasma center agreements across the US. And is it growing more or less 50 a year? Plasma business right now is 90% of the revenue. All these thesis is related to the plasma business because Paysign have 2 more business, the pharma and the credit cards. But right now I'm just focusing on the plasma business, who is, you can see here, it's 90% of the revenue. So the idea is like a macro call because as the US economy decelerates, and I'm expecting the economy in the US is going to enter recession next year, 2023, maybe in the first quarter, second quarter. In this scenario, US citizens are going to come again to the plasma centers as usual before COVID to donate plasma and to win some extra money. US citizens can win $600 a month just for doing 2 times a week to the plasma centers. This is the call of the main or the equity story of this thesis, right? So if you think that 2023 is a recession year in the US, and you think Paysign can recover the average monthly revenue per plasma center, who is one of the KPIs that I'm using for pitch this stock or to value this stock. And I think that the average revenue per plasma center can reach $9,000 a month. So this is similar levels than before COVID. So if you think that US economy can go to recession, I think Paysign could be a good value here. So what I'm doing is I'm forecasting 15.5 million 2024 adjusted EBITDA. If you apply 18 times EBITDA multiple, you can reach 5.15, $5.5 per share, which is 80%, 85% up from current prices. This is the brief, the abstract from the thesis. Let's go. What is plasma? So you know that 55% of the blood is in plasma, and then 92% of the plasma is water, but here we are interested in this 7%. 7% of the plasma are proteins, where then the companies like pharma companies like Grifols, CSL, Octopharma make the medicaments to treat the PIDD and the CIDD, right? This is the typical proteins that goes inside of the plasma. Then when these companies extract the proteins, they manufacturing medicaments like Isentra from CSL. This is the main medicament for the US for soup good in hemoglobins. I think Isentra is 85% of the market share right now, but Grifols have the other with Shemify, who is a new product with higher margin. So this is the protein medicaments that the big pharma doing when they extract plasma from people. So how Pace makes money? So, okay, the plasma donors go to the plasma centers. They, at the end, receive a physical exam. Then there are a plasmapheresis, which is the process to extract the plasma. And then they receive a commitment, like they receive right now $80 per donation, and then can schedule for next time. So it's really easy to extract money here. So Pace is paid for each donor transaction, right? This is how Paysign makes money. So what happens in the COVID and why this Paysign could be an opportunity? So here is a slide from Grifols Investor Relation Day, and you can see here from when the COVID starts, the number of plasma collections for weekly, you don't have the numbers because Grifols don't disclose that. They go down dramatically. And they recover, but when the US government make checks to the US citizens, they go down, and right now it's recovering. So COVID was a really disappointing and drawdown problem for plasma business. And the stock price was destroyed from here because at that time is when COVID quarantines start and government checks start. Remember that with the quarantine, people can go to the plasma centers. Plasma was open, but you cannot go there. So the stock goes from $10 to 1.15. So dramatically, the stock was destroyed. What's the opportunity then? If U.S. economy is going to enter recession, you can follow Lay Index from Conference Board, is a leading indicator. You can see here that right now it's here signaling recession. Each time that indicator goes here, the economy goes recession. You can hear the gray area. So what's the opportunity? U.S. monetary and fiscal policies remain restrictive. Right now, there are no more checks for U.S. citizens, and the interest rates go up, and it's go up dramatically. You can see here the Treasury yield curve. So it's from 0 to 4%. So it's sure that U.S. economy goes to recession. So in this macro environment, unemployment is going to increase. So I'm expecting that more U.S. citizens need extra money, like $600 a month, and they go to plasma centers. So you can see, for example, in Central Texas, how plasma donations are growing a good growth, a good revenue rate from 10 to 30% growth rate. So this is for August from this year. So in many areas of the US, plasma donations are growing. So with that time from 19 to last quarter, third quarter, Pace is increasing market share from 31% to 45%. Today is the plasma leader and has plans to reach 50%. They have an RFR agreement to add 20 more centers in 23. At the end, do you know that the Mexican people can cross the board to donor plasma, but in September, the U.S. District Court make an injunction to revert that. So plasma Paysign can recover 20% of this revenue with this new rule. Funds loaded goes up, so 60%, 24% 60% year on year, 24% quarter on quarter. So volumes are increasing too much. And I think, and I know that the third quarter was the highest revenue per month for plasma centers since COVID, and is it increasing? So here is my evaluation. So I'm estimating 564 plasma center agreements at the end of 24, with an average revenue per center, like in annual frequency, of close to a little bit less than 100,000. I'm assuming a gross margin of 57% with GA expense as percentage of total revenue goes coming from 48% to 35%. Here is my evaluation. So I'm expecting a little bit less than 38 million, who is the guidance for the company for at the end of 22. And then I'm expecting growing to, in terms of revenue, 47 million and then 53.4. How I reach that? So I'm assuming a market share close to 45%. And then I'm assuming an average monthly revenue per plasma segment center reaching 93,145. So this is below than the numbers from COVID. So this is the two KPIs that I'm using for valuation. One is the plasma centers, the number of plasma centers, and the other one is the average revenue for that. So I'm expecting 15.5 million EBIT. If you apply 18 times EBITDA multiple, I think it seems reasonable for this kind of business. You can reach across 5.15, 5.5, who is a good run up from current prices. If you want to use the lower EBITDA multiple, who is 11, so you can justify your actual price. So I think this is an asymmetric story right now that is it going to play next year. So I think, Bobby, this is my 10 minutes thesis in Paysign.
Hey, thanks, Kim. That was awesome and nice and concise. I do have a few questions for you. We got about a few minutes left here to ask a few questions. I'm familiar with the company somewhat. There was a time when the stock did, let's say even before COVID, it had a nice little run from under $1 to hit $20. I don't recall what the valuation was back then when it did that run, but can you maybe talk about that run to 20 and what I think some things started breaking down before COVID, right? A little bit. Can you maybe talk about what happened there? Because it came all the way back down to $10 and I'm eventually down to 1, as you know. So.
Yeah, here before the run up, so one US investor discovered the company to the community, and then the company goes really up, so they play really well. But here there are different things. The first one is, okay, people start to sell because the run up was really high. Then the company reclassifies some revenue from pharma business because they are maybe too much aggressive accounting for that. But I think it's something that the people know, and I know I talked with a company about that. So right now, pharma revenue goes from 7 million to right now less than 1 million. So I'm not computing pharma revenue in my numbers. And the real problem is when COVID starts, right? Because this is a business that needs that people goes to the plasma centers, but with the quarantines, the governments don't allow the people to go out to the streets. So the plasma center was open, but anyone is going to the COVID. And this is because from here, which when quarantines start, the stock goes down to that number. And then also government helps the people in the US with two checks from, I think, 2000, one check, and the other one is one half 500. So if you receive money, you don't need to go to the plasma center to receive 600 a month. But right now the checks stop, and right now you don't have quarantines. And as the economy is enter recession, people in the US maybe need extra money. But the explanation for this drawdown is COVID, is quarantines, is government checks, and is the reclassification from the pharma business.
And just thanks, Kim. And just to be clear, I also am not a current shareholder of the stock right now. You say I see you gave some targets. Did you consider that what the capital needs might be for the company going up to 24? Do you think they'll have to raise money, or you think they could do everything now organically moving forward?
Yeah, I think
Does that would affect your valuation, right? A little bit if that was the case.
Yeah, my valuation is for 2023, 24. So and it's only for the plasma business. Remember that this is a duopoly because there are two companies that has this business. So this is a 100 million revenue business. Paysign right now is the leader. Remember that in 2011, Citigroup was the leader. Then they sell the business to other company, and Paysign starts to this business in 2011. Remember that Worker was the main competitor of Paysign, but Worker makes bankruptcy last year. So today, a private equity bought the assets from Worker, and right now there are only two competitors. Big companies that they don't want to enter here because this is a niche market with less than 150 million revenue, so they are not interested because the competitive environment is really good. So I think the market structure is good, and the macro outlook is pitching that this stock should to go up because in every recession, US Americans go to plasma centers to win extra money.
And again, you don't think they'll have to raise money in the next 2 years to execute their goals?
I don't think so.
Okay. Now, real quick before we wrap it up here, there are other. So this is 90% of their business, I think you said, right? The plasma side of the business is at 90% of the business. But they also talk about in their filings about other parts like the corporate rewards program and serving the unbanked through prepaid cards. So I'm assuming corporations could load money on these prepaid cards instead of sending out a check, whatever. Reward programs. Now have they done anything with this business? Is it growing, or did it care about much? And did it have any? Is that a potential optionality in the story? Should we bake that into growth at all?
Could be a potential optionality, but I'm not computed that because before that company enters the plasma business, they enter the pharma business with copay, right? So they never should they never can scale this business. So I'm not too much confident with these two other business, but I don't need that because the stock was trading at $1, right? So right now it's below 3, and plasma business, you can value a range from $5 to $6. So I don't need the other business. Right?
Okay, and one last question, Quim, before we wrap it up here.
Yeah.
In terms of the amount of people who actually go to plasma centers, right? Are we at what would the historical peak be? What would be the maximum number of people you would see? Maybe, do we have that number anywhere? Is that stat anywhere?
Well, my number is first to recover the 2019 numbers before the COVID. Okay, remember that in 2019 we don't have a recession. So what I think is that in a recession, numbers could be higher. So in a bull case, you can expect numbers in terms of average revenue per plasma center could be higher than the numbers from 2019, which is more than 100,000. So I know this company because I'm from Spain. I'm located in Barcelona, and Grifols, who is one of the main players in the plasma business in the US, is from here. So I used to talk with the management of Grifols, and they start to recover the plasma volume. So a recession is the best thing. Is the best catalyst for this company. So this is because I think could be interesting for 2023.
Okay, great. And well, thanks, Kim. This has been awesome. We're out of time. I'd love to talk to you more about the company, but we could do that some other time. And hopefully this is one of our top performers in the competition. Appreciate your time. We'll be talking soon.
Okay, thank you for inviting me, Maj. Okay, bye-bye.